Good afternoon, everyone. We welcome all of you to our webinar on GST Audit. Uh, my name is Lalit, and we have with us Mr. Shiva Nagesh, partner Palit Co, Mr. Pulkit Singhal, director at Palit Co, as the esteemed panelists to take this webinar. This webinar is essentially divided into three parts. Pulkit, I'll request you to turn over the slide once. This webinar is essentially divided into three parts. First is overview. The second is your contents of Form GSTR 9 and 9C. And the third, with respect to, in the third portion, we'll be presenting some points that we should be pondering upon while filing the Form 9 Annual Return and Reconciliation Statement. We hope this session will be insightful. Please note that we will be taking up the questions at the end. Over to Shiva to start with the first part.
Yeah, good afternoon, everybody. Hope all are keeping fit and fine during this troubled times. And I think we can start with the legal provisions which have a bearing on this filing of GSTR 9 and 9C. Now to start with Section 35, subsection 5 of the CGST Act contains an explicit provision which mandates that specified taxpayers who have a particular threshold turnover, they have to furnish the reconciliation statement. Then we have Section 44, which mandates that every taxpayer to furnish annual return for each financial year by 31st December of subsequent financial year. So this is very significant in view of the fact that the annual return for the year 1920 is also to be filed by 31st December 2020. So the annual return for 1819, of course, has been extended, as you all may be aware. There was a notification issued by the central government on 30th of September, where they have extended the date for the financial year 2018-19 to 31st October 2020. So the annual return and the in Form 9 and the reconciliation statement in Form 9C have been prescribed in Rule 80. So Rule 80 prescribes the form in which the chartered accountant or the cost accountant will conduct an audit and also certify the reconciliation statement. So as I mentioned earlier, the applicability for 2018-19, I had mentioned that there is a threshold limit prescribed under the Act to file this audited statement and the reconciliation statement. And the current threshold for the year financial year 18-19 is, if your turnover is below 2 crores, then filing of Form GSTR 9 is optional. And even filing of the reconciliation statement in Form GSTR 9C is not required. Then if your turnover is between 2 crores and 5 crores, filing of Form GSTR 9 is mandatory, even though filing of GSTR 9C is not required. And then the third category is, if the turnover is above 5 crores, then both GSTR 9 and GSTR 9C have become mandatory. In fact, there is no relaxation granted to the assessees having turnover of more than 5 crores. So this is all pertaining to the financial year 18-19. Now let's see how it changes. Rather, there is a departure in the threshold limit when we come to the financial year 2019-20. So financial year 1920, below 2 crores, GSTR 9 is optional, and GSTR 9C is not required. There are in fact only two buckets in the financial year 2019-20 as compared to three buckets in 18-19. So below 2 crores, I have already just explained, and above 2 crores, both of them are mandatory. That is, filing of Form GSTR 9 and GSTR 9C is mandatory. Word of caution here, because now 2018-19 we have to file by 31st October 2020. But the last date for the financial year 2019-20 is also fast approaching, and that is 31st of December 2020. So as I just mentioned, we have in fact tabulated the due dates. For financial year 18-19, it would be October 31st, 2020. And for the financial year 19-20, the last date is December 31st, 2020. So we have two, in fact, important dates in this calendar year. So all may kindly note. One is the October 31st, 2019 and 20, and then the second is 31st October, December 2020. And then most important, in fact, point to be noted while finalizing the Form 9 and Form 9C is there are certain timelines which have been laid down in the statute, that is the CGST Act. So we have given you a short glimpse, bird's eye view, I would say, which will give you an idea as to what all have to be completed before finalizing the Form GSTR 9 and 9C. First and foremost is the timeline prescribed under Section 16, subsection 4 for availment of input tax credit. Then Section 34, subsection 2 also prescribes a time limit for finalizing your credit notes and adjusting your output tax liability. Then Section 36, in fact, lays down a maximum period of 72 months for which the books of accounts have to be retained by the taxpayer. And if you are, in fact, before any appellate authority or any judicial authority, including High Court or Supreme Court, then Section 37 prescribes that 36 itself prescribes, the second limb of the section says you'll have to maintain the books of accounts till your appeal is finally disposed of. So that might take years in view of the previous experience the assessees have had. So you'll have to be very careful about the safety of the records, which you'll have to maintain till the appeal is finally disposed of in either way, whether on an appeal by the department or appeal from the assessee side. The next is Section 37, which in fact gives a legroom to the assessees to correct any errors or omissions which they have noted while filing Form GSTR 1, which allows them to correct the GSTR return and file a correct one. And then we have the two provisions, Section 62 and 63. In fact, they basically are meant for the assessment of the tax liability of non-filers of the returns. That is Section 62, and the assessment of the assessees who are unregistered category, that will be governed by Section 63. Then we have the recovery provisions. Recovery provisions which have been laid down for the recovery of the tax by the GST officers. That is, if any tax is found to be short paid within the normal period of limitation, then section 73 subsection 10 can be invoked by the department for the recovery of the tax. And then if the period is in fact hit by suppression, collusion, fraud, etc., then the department can make out a case for recovery under section 7410. And I think with this, I finish my part of the presentation. Now I would request my colleague Pulkit to take over from the next slide, where he will be taking you through the various nuances contained in the returns as to how they have to be taken care of. Over to you, Pulkit.
Pulkit, you're on mute.
Audio.
Sorry. Good afternoon, everyone. As we know, in case of GST compliances, we are required to file two forms, Form GSTR 9 and Form GSTR 9C. For the sake of simplicity, we have collated all the information required to be furnished in both the forms in one slide. Now, let us understand the first form, Form GSTR 9, which is annual return. Annual return means a return which is required to be filed at the end of the financial year, wherein a taxpayer is required to give all the information as compared to what he has furnished in earlier forms. Basically, a taxpayer is required to file two forms, Form GSTR 3B, which is a monthly return, and Form GSTR 1, which is details of outward supplies. Now, in order to understand Form GSTR 9, we have divided our form in 5 parts. First part, we'll be dealing with outward supplies. So, it would be better for a management as well as for the auditor to understand which all tables are relevant for filing the information with respect to outward supplies. So in Form GSTR 9, basically there are two tables which are dealing with information with respect to outward supplies. First is table number 4 and second table number 5. So table 4 basically gives a chance to the taxpayer to give all the details of their supplies on which tax is payable by the taxpayer, such as B2B supplies, B2C, team and export supplies, supplies made to SEZ on payment of GST, export supplies. Then, on the other hand, there is table number 5, wherein a taxpayer is required to give details of all those supplies on which he is not required to pay any tax, such as exempted supplies, nil rated supplies, non GST supplies. Now, for the financial year 17-18 and 18-19, since GST came from 1st July 2017, it is very difficult for the taxpayer to give such information to the government in such format because taxpayers were not knowing that they were required to give such details, such exhaustive details to the government. So government has given some relaxation specifically for financial year 17-18 and 18-19 as of now. So with respect to table number 4 and table number 5, government is giving two relaxations. That is, taxpayers can report the details of their outward supplies in table number 4 and table number 5, net of credit notes and debit notes. For example, if their outward supplies is rupees 100 and they have issued credit notes afterwards for rupees 20, so they can report either 100 and 20 both, so the net impact will be 80, or they can directly report rupees 80 in table number 4 or table number 5. Now, on the other hand, as we know, it was becoming very difficult for the taxpayers to bifurcate their supplies on which they were not required to pay any taxes, such as exempted supplies, non-GST supplies, nil-rated supplies. So, government has given a relaxation to the taxpayers that they can report all their such supplies under one head only, that is exempted supplies in row 5D. So basically, after giving information in these two tables, taxpayer has given all the information related to its outward supplies in Form GSTR 9. Moving ahead, another part of the business is inward supplies. in order to provide information in Form GSTR 9, there are basically three tables: Table 6, Table 7, and Table 8. So, in case of inward supplies, there are three things which are required to be taken care of by the taxpayer under GST regime. First, the availment of input tax credit. So, the taxpayer will give details of ITC on which he is the inward supplies on which he has claimed input tax credit in table number 6. Then, if any reversals are required to be made due to miscellaneous reasons, Rule 42, 43, or 180 days criteria for making payment to their suppliers, or any other reason, then they are required to give the details of such reversals in table 7. At the end, they are required to reconcile the input tax credit which they have claimed by Form GSTR 3B with Form GSTR 2A. So basically, there are three tables. Table 6 is for ITC availment, Table 7 is for ITC reversals, and Table 8 is for Form GSTR 2A reconciliation with ITC claimed in Form GSTR 3B return. Now, as taxpayers were not knowing that government will be required such information in such detailed manner, wherein taxpayers were required to give details of ITC claimed headwise also: inputs, input services, capital goods. So later on, government has given some relaxation to the taxpayers, wherein they can report or give the consolidated figure in inputs only. They are not required to give the details in bifurcation. That input services, this amount is claimed; under capital goods, this amount has been claimed. So they can give a consolidated figure under inputs only. They are not required to give details headwise. In case of ITC reversals, there are so many reversals, mode of reversals, basis which a taxpayer is required to reverse their ITC credit under GST regime. So, in order to give relaxation for the reporting purposes, government has given a relaxation wherein a taxpayer can give details, a consolidated figure under other reversals. Irrespective, they have reversed the input tax credit due to any reason. Last but not the least, and the most important, because nowadays government is issuing so many notices wherein they are saying that the ITC which you have claimed in Form GSTR 3B is not reflecting in Form GSTR 2A, which is the auto-populate form, basis the details of supplies furnished by their suppliers in their Form GSTR 1. So, if a taxpayer is not satisfied with the figure or the final calculation coming out of table number 8, wherein there is a reconciliation between ITC claim in Form GSTR 3B and ITC reflecting in Form GSTR 2A, then a taxpayer can provide or can submit a self-declared GSTR 2A RICO, wherein he can self-certify. There is no requirement for the taxpayer to take a CS certification or for this particular format or for this particular document. They can self-certify that basis our understanding and basis our reconciliation, this particular amount is reflecting in Form GSTR 2A appropriately. So, in this manner, this format or this form is required to be submitted along with 9C. Moving ahead, the most important, tax payment. There is only one table which deals with payment of taxes, that is table number 9, wherein the details have been auto-populated basis the GSTR 3B return, because GSTR 3B return is a return where a taxpayer payments makes the payment to the government either via electronic cash ledger or a credit ledger. There is no relaxation provided in this particular table because this is the auto-populated table. But if there is any difference in the information furnished by the taxpayer in Form GSTR 1 or 3B or books of accounts, then there will be some adjustment required to be made in table number 9, wherein a taxpayer can report the actual liability required to be paid by him, and if there is a differential amount required to be paid, then he can pay such amount via Form DRC 03. Moving ahead, as we know, under GST regime, in case of ITC availment as per section 16.4 or section 34, wherein trade notes have been discussed, the timelines have been specified, wherein a taxpayer can avail input tax credit of the inward supplies till September month of the subsequent financial year, or they can issue GST credit notes till September month of the subsequent financial year. This means a taxpayer can make few adjustments of the current financial year in subsequent financial year as well. While filing an annual return, taxpayer is required to also take care of such adjustments. So basically, there are five tables for such adjustments. Table 10, which is for supplies and tax declared in subsequent financial year. For example, for 1819, the adjustment will be made in 1920. Table 10 is for supplies and tax declared. Table 11 for supplies and tax reduced. Table 12 is for ITC reversals, which means ITC has been claimed by the taxpayer, say in financial 1819, but due to any reason, he has reversed such credit in subsequent financial year 1920 till September month. So that particular reversal will come here, but it is to be noted that this reversal will only be reported here in case such reversal is pertaining to the financial 1819 in my example. Moving ahead, table number 13, ITC availment. This is a case wherein a taxpayer has received some inward supply from a supplier in financial year say 1819. He has recorded such particular credit in the books of accounts, but due to some clerical issue or clerical mistake, he has not taken input tax credit of such GST while filing from GST 3B return. So he can claim such credit afterwards in form GST 3B till September month of subsequent financial year. So such particular amount will be reported in table number 13. Last, table number 14, which is for differential tax paid. If due to any of the reason aforesaid, the taxpayer is required to pay any taxes, then the details of such taxes paid will be reported in table number 14. Now, government with respect to such five tables has given some relaxation that taxpayer can report the details of ITC reversals or ITC availment in table number 12 and 13. It is optional. It's up to the taxpayer whether they want to report or not. Because table number from table number 10 to table number 14, it's an informative tip, part of the form GST 9 we can say. This will not impact in any ways against the taxpayer, because this is giving information to the government that we have taken some adjustments of current financial year in the next subsequent financial year. Now, at the end, there is miscellaneous information required from the government, from the taxpayer. Table number 15 is demands and refunds. Table number 16, if any inward supply has been received from composition taxpayer under deemed supply. Table number 17 and 18, HSN details, wherein a taxpayer is required to give details of the outward supplies and inward supplies HSN wise. And table 19, late fees. So, in order to give relaxation, the government has made reporting in table 15 to 18 optional. It's up to the taxpayer. If he want to furnish that information, he can. If he don't want to furnish, it's really fine. Government will not take any severe or any action against the taxpayer. So basically, in five parts, we have collated all the information required to be furnished in Form GSTR 9 basis our understanding. So for outward supply, table 4 to 5, inward supply 6 to 8, payment of tax 9, adjustments of previous financial year taken in subsequent financial year 10 to 14, and other information 15 to 19. It is to be noted that if in a case taxpayer is required to claim 100 rupees of input tax credit, however he has claimed only 80, then there is some rumors or some misunderstanding that whether we can claim such leftover 20 rupees ITC via from GSTR 9. The answer is no. The government has clearly clarified this issue via press release, wherein they specifically states that this particular form GSTR 9 will never hit the electronic credit ledger of the taxpayer. So means if a taxpayer wants to reverse or avail the input tax credit, the eligible form will be Form GSTR 3B return for ITC reversal and availment. And for if taxpayer wants to reverse the input tax credit, then they can either reverse the same also via Form GSTR, Form DRC 03 as well. Now, moving ahead to Form GSTR 9C, which is the reconciliation statement. Reconciliation statement is basically comprised of two parts, Part A and Part B. Part A is a number crunching exercise wherein the taxpayer and the auditor will be furnishing all the details of their outward supplies, inward supplies in a very format, in a specified format wherein there is basically a reconciliation between their books of accounts as well as the information furnished in Form GSTR 9, which is on the GST portal. So this is part A, and this part B, which is certification part, wherein the auditor will give their comments while whatever they have observed while doing the GST audit. So for the sake of simplicity, we have again divided our Form GST 9C in few parts. So first part will be outward supplies, wherein following tables are dealing with outward supplies, table 5 and table 6, wherein a taxpayer is required to reconcile its gross turnover from books of accounts with the turnover as per Form GSTR 9 as per GST portal. Then table number 7 and 8, wherein the reconciliation will be of taxable turnover. Because for the sake of simplicity, we can divide the turnover in two parts, taxable turnover or exempted turnover. So table number 7 and 8 deals with reconciliation of taxable turnover. This will give you the value of total turnover on which a taxpayer is required to pay GST. Now, table number 9 and 10 will deal with reconciliation of taxes paid. Here, the auditor, basis his findings, will give that taxpayer is required to pay this much amount of tax to the government, which will be compared with the amount of taxes paid by the taxpayer. So this is basically a reconciliation between what amount should be paid versus what amount has been actually paid by the taxpayer. If any differential amount is there, then there are two options. Either if the taxpayer agrees with the findings of the auditor, he can pay the same way from DRC 03 in cash, or if he does not agree with the findings of the auditor is having an option to report such amount in table number 11, which is for additional amount payable but not paid. Now, for the sake of simplicity, for the financial year 17-18 and 18-19, government has given some relaxation. In table number 5, there are many reasons which government has given, due to which there will be a difference between turnover as per books of accounts and turnover as per GST portal or as per GST law. So government has given an option. Either the taxpayer can give all such information reason wise, or they can give a consolidated amount in table number 5O. So this particular, from table number 5 to 11, all the outward supplies details have been captured. Now in case of inward supplies, basically table number 12 to 16 are dealing, wherein table number 12 and 13 deals with reconciliation of input tax credit, wherein we reconcile, that auditor reconcile the ITC as per books of accounts, the eligible ITC, with the ITC claimed by the taxpayer in the financial year. So this is basically a basic reconciliation. In table 14 and 15, auditor will give the details of all those expenses on which a taxpayer has claimed input tax credit. Now it's a very hectic task because in the course of furtherance of business, a taxpayer incurs so many different types of expenditures on which either pays GST or sometimes not. In case if he pays GST, taxpayer is required to also determine whether he is eligible to claim such credit or not, keeping in mind the provision of section 16 and 17. So in table 14 and 15, the auditor will give the details of all those expenses on which ITC has been claimed, plus the eligible ITC basis his understanding which should be claimed by the taxpayer. In table number 16, if there is any tax payable due to unreconciled ITC difference, which can arise in case if, as per the findings of the auditor, the eligible ITC as per books of accounts is rupees 100. However, the taxpayer has claimed rupees 120. Then this 20 rupees, which is in excess of the books of accounts, has been claimed by the taxpayer via Form GST 3B written on GST portal, will become payable by the taxpayer as per the findings of the auditor. Now, government has given some relaxation while filing such information in table number 12 till 16. Government has given relaxation that auditor can report information 12B or 12C. It's optional reporting. In basically 12B and 12C deals with the ITC which is booked in the current financial year, taken in subsequent financial year, and the vice versa case. So government has given this relaxation. For table of 14 and 15, the government has given complete relaxation. That auditor is not required to give details in table of 14 and 15 at all. They can leave that particular table. But a taxpayer should examine or should also acknowledge, consider this fact as well, that if they're not giving such information to the government via from GST 9 or 9C due to such relaxation, that doesn't mean that government cannot ask for such information from the taxpayer. Just for the completion of the this audit process, the annual compliance is the initial year of GST regime. Government has given some relaxation. If in case the government, the GST department came for the investigation, they can surely ask for such information from the taxpayer. Last but not the least, if in while doing the GST audit of the taxpayer, auditor feels that there's some additional liability due to some non-reconciliation or non-compliance of the GST provisions, he can report such particular additional liability in part 5 of the form GST 9C, which is the miscellaneous part, the last part of the form. And there is no registration has been provided by the government for this particular table. So through this, we have discussed form GST 9 and 9C in a very summarized manner, as well as this will give us the bird eye view, this will give us the whole control, the whole knowledge about the form 9C and 9. Moving ahead, there are few points which are required to be taken care of while filing Form GST 9 and 9C by the taxpayers. The first issue which we feel faced by the taxpayer is the extraction of data. That is, how to extract optimum data efficiently and effectively from books of accounts in order to fill information from GST 9 and 9C. To the best of our experience and understanding, a correct manner will be, or appropriate manner will be, the taxpayer should first determine which all fields are relevant for him. And basis such understanding, he should initiate further and extract data from its books of accounts. For example, if a taxpayer is making supplies only B2B and B2C, there is no outward supplies, deemed export supplies, or supplies made to SEZ, or any other, there are no such supplies has been made by the taxpayer, then he should primarily focus on taking outward supplies from their sales register as well as the outward liability registers, basis which he will be able to determine which kind of information is properly appropriated or taken from the books of accounts. Moving ahead, the second point to ponder is adjustment of previous financial year, because it is very much important for a taxpayer say that how he should report or take impact of adjustments of financial year 17-18 made in Form GST 3B and Form GST 1 filed for financial 18-19. So suppose if there is some credit which has been left over by the taxpayer while claiming the credit in Form GST 17 in Form GST 3B in 17-18. In that particular case, taxpayer will claim such credit in subsequent financial year till September month via Form GST 3B. So it is very important for a taxpayer to know how he should report this particular adjustment made in terms of ITC availment in Form GST 9 and 9C to be filed for 18-19. Why the issue is arising? Because ITC has been claimed in financial 18-19, but it pertains to financial 17-18. So this particular ITC availment should not form part of financial 18-19 availment, because this ITC availment will not come in books of accounts for the financial 18-19. So all such adjustments which come across while doing the audit, the auditor as well as the taxpayer should properly take care that how they can report and take impact of same while filing 9 and 9C. Moving ahead, interest payment under section 50 of the CGST Act. In
Thank you,
this
Pulkit.
particular case, yeah, I will
Pulkit, I
request
take
Lalit
this
to
forward.
take forward.
Yes. So there are some interesting points with respect to the interest liabilities that have arisen in the course of GST implementation. Now we see that during the initial periods, there were several issues pertaining to adherence of the timelines in filing of Form GSTR 3B. Many taxpayers had to make so many adjustments. There were technical glitches as well. Apart from that, also there was a lot of upheaval task that was there at the hands of the SSEs in collation of data. Uh, Now, this was especially in the case wherein the assessees, taxpayers had centralized systems for compliance. The task for coordinating with the units itself became a huge task. Now, when we talk about these issues, uh, we saw that there were several taxpayers who had filed their Form GSTR 3B belatedly. And the taxpayers today have been issued notices directing them to deposit interest without the issuance of show cause notices. These notices provide for imposition of interest on the gross GST paid. Now, before we proceed with our view, I would like to present a little background behind this entire demand of the interest. ITC, the input tax credit, can be utilized for discharge of GST only through Form GSTR 3B. Once there is delay in filing of GSTR 3B, the department felt that interest has to be imposed on the entire output tax liability, that is the gross output tax liability. The department further was of the view that since this is in pursuance of a tax demand which has been self-assessed by the taxpayer in his return filed belatedly, the department was of the view that section 75 subsection 12 is applicable. On application of this provision, the requirement to issue show cause notice stood obviated was the obvious recourse that was available to the tax officials. The taxpayer's stand will now summarize the taxpayer's stand. The taxpayer stand was that the objective for the imposition of interest was that government is deprived of the tax demand which is due and payable. It is compensation for the loss suffered on account of time value of money. Now, please see, hard cash underlying the ITC portion stands deposited into the government's kitty. Then, from where does the question of interest on output tax liability that could be deposited using such ITC arise? Moreover, the assessee stand with respect to the initiation of recovery proceedings was that Section 73 and Section 74 are not subject to the applicability of Section 75. The term that was relevant in Section 75, subsection 12 was notwithstanding, which basically implied that in case of a conflict between Section 74, 74 73, 74, vis-a-vis Section 75, the preference had to be given to Section 75. Firstly, Section 75, subsection 12 never covers interest. It only covers self-assessed tax liabilities. Secondly, it only intends to cover the amounts which have been self-assessed or simply put, assessed by the assessee on his own. The interest amount depicted in these notices were not self-assessed, but assessed by the department, which the entire taxpayers community was opposing at large. Then, in such a scenario, the initiation of recovery proceedings, bypassing the entire procedure for confirmation of demand, was unnecessary and illegitimate. Now, post this dispute, the provision was amended by the legislature, the parliament, by Finance Act 2019. A proviso was inserted in section 50 subsection 1, whereby interest was imposed only on the net output tax liability. That means liability, output tax liability, after adjusting it, after adjusting the ITC that was admissible to the SSEs, whatever was the cash component, only on that component the interest was to be imposed, was the aim of this proviso. Now, when this proviso, interestingly, has been brought into operation only recently. The central government notified this provision prospectively with effect from September 1, 2020. The following questions that arise, from this position are as follows: that first of all, why was the provision applied prospectively? Because the GST Council, first of all, had already passed the resolution whereby it directed that the provision should be implemented retrospectively. Now, why was there a deviation from the stand of the GST Council? The answer to this lies in the powers that are conferred upon the central government while in exercise of its legislative powers. The central government, unless authorized by the legislature, by the legislation itself, in very specific terms, cannot apply the laws retrospectively. And it is only on this account that Section 50, subsection 1 proviso was implemented prospectively. I believe the notification number is 63 of 2020. The second question that arises from this issue is, can the department still issue us a show cause notice or simple notices imposing interest on the gross GST liability for the prior period? Since the provision has been implemented prospectively, for the prior period, there is still a possibility that the department can issue show cause notices. Now, I'll give an analogy that just because a murder carries a punishment does not restrict any person from committing a murder. There are just consequences. The department has to follow the GST Council. Otherwise, what is the purpose of the GST Council? The purpose of the GST Council is a legislative, it's a constitutional body, the resolutions of which bind the legislature as well as the governments. And hence, while they should refrain from doing it, but as we practically see it today, they have been issuing the show cause notices, which can be defended. The next question that arises from this is, can we claim refund of the differential interest? The answer to that would be, if we read section 54 of the CGST Act, it provides for refund of tax amount as well as the interest, and hence under section 54, refund of interest can be claimed by the SSEs. Another interesting question that can arise with respect to refund of interest that has already been paid by the taxpayers for the prior period that arises is that, can we claim refund even if 2 years have passed? Now we see that section 54 prescribes a very strict timeline for the availing refund, which is of 2 years from the relevant date. But most importantly, there is a line of case laws that we need to look forward to, we need to refer to while deciding this question. In case of, in under central excise regime also, this was a question, and wherein the courts, high courts, supreme courts had held multiple times that where the tax demand or where the interest amount had been paid under a mistake of law, that amount will be refundable to the SSE regardless of the non-compliance or non-adherence with the timeline provided for by the statute. Now, the reason for this ruling was that now the reason behind which the courts had ruled in the favor of the SSCs was that in case of non-refund of that amount, the government would stand unjustly enriched, which would be in contravention to Article 265 of the Constitution. Now, which is a very important provision in the Constitution, which has been directly borrowed from the first constitutional document in the entire world, which is Magna Carta. So these were the questions pertaining to the interest imposition. Now, over to Pulkit. If
Now, thank you, Lalit. The next point to ponder is if, while doing the audit of a taxpayer, there is one observation wherein he is required to pay certain amount of GST liability under reverse charge mechanism, say for on such an inward supply from GTA or legal services, then what will be the implications? Whether what will the interest implication on delayed payment of GST under RCM and its eligibility for input tax credit? Over to you, Lalit.
yes, uh, so when we talk about this GST implications which arise in respect of inward supplies which have been received by a taxpayer, which are exigible to tax under the reverse charge mechanism, we see an interesting interpretation that has been circulating or going about in the taxpayer community, which is that many of the taxpayers have been asking this question that what about a case wherein they had received the inward supplies, the supplier, the vendor had raised the invoice, but probably the recipient missed to reckon, missed taking account of that particular supply and missed raising that invoice. What about that? So I'll give an example for this point. Suppose we have a taxpayer who received an invoice on September, or sorry, we talk about on September of 2017, and he missed reckoning that invoice in his books of accounts, or he missed raising that invoice in terms of the GST Act and discharging the GST liability thereupon. What about those scenarios? Now, in case of those scenarios, many of the taxpayers had adopted the position that the moment they raise the invoice in terms of tax invoice under Section 31 of the GST Act, their entitlement to the credit should commence from that date. Secondly, any tax liability, the demand of tax liability should also come from the date, only on the date on which they raise the tax invoice under Section 31. Now, we have, in this regard, we have to refer to the provisions concerning time of supply. When we refer to the provisions concerning time of supply, which are provided under Section 13, subsection 3 of the CGST Act, we have a scenario as per which the time of supply in case of reverse charge supplies happens as per the date of payment entered into the books of accounts, the date of remittance of the payment, or the date immediately following 60 days from the date of issue of the invoice by whatever name called in lieu thereof by the supplier. Now, you see, the term invoice as occurring in Section 13 is qualified by the expression by the supplier. Now, usually what people were suggesting was that the term invoice has already been defined in the CGST Act to mean tax invoice, and accordingly, the moment it is when the recipient raises the tax invoice, at that point of time of supply should come into picture. But you see, the definition clause, which is provided under Section 2 of the CGST Act, it starts with the point that in this act, unless the context otherwise requires. So in case of the GST Act, wherever the word invoice occurs, but there is a difference in the context in which it has occurred, then we have to borrow the meaning, we have to construe the meaning as per the context. We can't fall back on section 2 for the definite, for the understanding the meaning of that term. Now, invoice as occurring in section 13, subsection 3 of the GST Act is followed by the expression by the supplier. Supplier, in case of reverse charge supplies, never raises a tax invoice. So the context in which the term invoice occurred in section 13, subsection 3 was only an invoice which was raised by the supplier and not a tax invoice. Once we say that time of supply is determined on the basis of the invoice which has been raised by the supplier or the vendor, your interest liability or your liability to raise the tax invoice, even in terms of section 13, section 31, subsection 3 of the GST Act would come into picture directly when you receive the invoice or when you receive the services. In such a scenario, uh, your liability to pay the interest would arise automatically the day the vendor raises the invoice. The next aspect, the next leg to that question would be, how would you determine, how will we determine the time period for availment of credit under section 16 subsection 4? Now, when we talk about section 16 subsection 4, it says that a registered person shall not be entitled to take input tax credit in respect of any invoice or debit note for supply of goods or services or both after the due date of furnishing the return under section 39 for the month of September following the end of financial year to which such invoice relating to the debit note pertains. Now, here, the term invoice, it totally agree that it refers to tax invoice. But you see, and even in terms of section 37, when are we required to raise that in? When is the recipient required to raise that tax invoice? In terms of section 31, subsection 3, the recipient is required to is required to issue the invoice on the date on which he received the services. Once a taxpayer has received the services, he is required to raise the invoice, and accordingly, from that date, uh, he has to reckon the time period which has been provided under section 16 subsection 4. Now, one cannot violate section 31 and then say that section 16 subsection 4 will not be applied. So, over to Pulkit on after this.
Now, as we know, in our profit and loss account, other than our revenue from the sale of goods and services, there are miscellaneous incomes which we earn in a business, such as commission income, interest income. So it's very important for a taxpayer as well as an auditor to correctly determine the GST implications on such other incomes. Lalit?
So when we talk about other incomes, there are various miscellaneous incomes that an assessee earns. There could be interest amounts which could have been received by a taxpayer. There could have been commission. There could be rental income. In all of these cases, now when we are conducting audit, we many a times see go through a situation that the taxpayer is usually does not end up reckoning such amounts or uh, does not make too much of an effort to understand the GST implications that arise on these other incomes. But however, now in order to fully justify the exercise of GST audit and also to prevent any tax exposures that arise from these on account of these in other incomes, we will have to have uh, conduct a detailed analysis with respect to even other incomes that arise from a in respect of other incomes. Now, interesting point that arises is this, that many a times other incomes fall within the scope of services, category of services which have been prescribed under Schedule 3. Now, Schedule 3 services neither carry the GST liability nor do they carry the exposure on account of ITC. Uh, Pulkit, do you want to add anything?
No, Lalit.
Okay.
Now, last question, which we want to discuss with you all. Like, in case if while doing the audit, there is some amount required to be paid by the taxpayer as per instructions given in Form GST 9 and 9C. If there is any amount of liability required to be paid by the taxpayer by Form DRC 03 under GST audit while filing Form GST 9 and 9C, he can pay such amount by electronic cash ledger only. So the question arises whether GST liability required to be paid using electronic cash ledger or electronic credit ledger only. Lalit.
So, when we talk about Form DRC 03, the stand of the government remains clear that that it has to be paid by way of cash only. DRC 03, when we talk about DRC 03, it talks about payment of the tax liabilities through cash only, and the department is raising disputes and will be raising disputes whenever the demand or the tax liability is discharged through uh, ITC. Uh, but uh, we we're too are of the view that while this creates an exposure, an area of exposure with respect to the liabilities, the fact remains that when we are discharging GST liability, output tax liability, even through Form DRC 03, what are the applicable provisions involved? The applicable provisions that are involved remain to be Section 49. Now, when we talk about Section 49, it very evidently and very conspicuously allows the taxpayers to discharge their output tax liabilities by using the ITC that is there reflecting in their electronic credit ledger.
Right.
Once the statute allows, the executive cannot go against that statute and create a demand pursuant to that. In any case, a demand, if any, which is created, would be entirely revenue neutral.
One more point here, Lalit. Because ITC is my vested right, and in fact, in a very recent judgment in the Supreme Court has held that it's a property article. I think they have invoked Article 300 and said it's my property. So the
Yes.
courts have gone to that extent of holding that ITC is my vested right, and I cannot be deprived of that right simply by inserting a instruction in the filing of Form 9C. So the department is clearly depriving me of my vested right, and which surely can be defended.
Yes. Supplementing what Shiva said, uh, so ITC, once an ITC has been availed, input tax credit has been availed by a particular taxpayer, it becomes a property which can be owned. It might not be transferable, but it is owned. Now, all properties are conferred, are protected directly by the Constitution. Your right to property is a constitutional right under Article 300A of the Constitution. And any violation to that must be protected, must be authorized directly by the legislation which has been uh, made by the legislature, the parliament. So, by way of a mere clarification, circular, notification, or some press release, these pointers, this right cannot be violated, abridged in any manner.
Absolutely.
And the fact remains that your ITC remains a vested right uh, from the long-standing judgments of Aisha Motors, right from which start from 1990s, and hence, since GST is nothing but substantially, when it comes to the points of ITC, it is substantially a reproduction. It merely expands the scope of ITC, but it does not restrict. So the judgments, to the extent they were beneficial for the SSEs, which were passed under the central excise regime, have to be borrowed even for the purpose of determining the legal implications arising under the GST regime. Uh, Thank you, Pulkit. Over to you.
Thank you, Lalit. Moving ahead is a questionnaire session. So we request our attendees, if they have any questions, we are ready to answer them, or they can also share their questions and queries on our email IDs, wherein we will reply to them in a very descriptive manner.
I think the emails, we can receive the emails with respect to the queries. Okay.
Sure, Lalit.
Thank you, everyone, for taking out time to attend this webinar. Uh, you've been I hope you found our presentation as well as the inputs insightful, and hope it will help you in expediting the process and understanding what are the implications that arise with respect to common issues that arise under the GST while filing the annual return and reconciliations.
True.
Thank you.
Thank you,
Thank
everyone.
Thank you very much.